Here's a trade from Monday, May 3rd in the silver market. As with all our trades, we like to start with the daily context. And as you can see, we have had a period of consolidation where 1, 2, 3, 4, 5, 6, 7 bars were within the range of this April 21st bar. And yes, there's a little violation here, and you'll see when we go down to a lower time frame how that looks. And really what it serves as is a trap whereby anyone who thought that this pattern up until here was breaking to the downside may have shorted down here and immediately got squeezed and felt pain. Another thing of note is we've had 3 consecutive PF3s to the downside. PF3 is a concept that was developed by Linda Raschke, whereby the oscillators, the 2-period rate of change, which is this line, the LBR 310, the fast line and the slow line, are all pointing to the downside. And typically when that happens, a market gives it all that it has to the downside. So the fact that we had 3 consecutive ones that essentially stayed in this range is a latent sign of strength hiding in this otherwise neutral pattern. If we just glance over at some of these previous PF3s, you'll see, these couple of PF3s were these 2 down days here. These couple of PF3s were these 2 down days here. So the fact that these essentially stayed in the range when getting 3 of them in a row gives us a little bit of a bias that the upside might be the correct direction for the eventual breakout. Now if we go down to a 60-minute, you can see we have this downtrend line, and that trend broke at on the 725 bar, the 725 to 825 bar, which is the pit open. 725 is what's considered the pit open in silver. And taking it down further to a 15-minute, you can see that where this breakout happened, there ended up being a little bit of consolidation back and filling, where you broke out, you came back and retested, and then continued to go higher. And to get the ultimate precision on a pattern like this, and while we're on this chart, let's look at this. This is that violation on the daily pattern. It was barely these couple of tails. And it came at the end of this very strong flush. And knowing that happened, this was probably some margin liquidation, forced selling below here. And then we pop back up above it, and that area served as support a couple of more times before launching this move to the upside. Now if we take it down to the lowest level, the 5-minute chart, this 15-minute consolidation that we had created a pattern called a hoagie. And basically this hoagie is where you have 1, 2, 3, 4, 5 bars that were all inside of the 755 bar. And in addition, this little bar here created what's called a bihikaki, where you had an inside bar and another bar that tested below it but couldn't close below it. And then we resumed to the upside. So using either of these patterns as an entry, you would have bought in around 26.56 and a half, or you could have gotten a little bit earlier if you used the hikaki. And once that pattern broke out, we can even take it down to a 1-minute and see that you got further confirmation by having this nice little 1-minute pennant that formed and continued to break. And going back to the 5-minute, you can see that this led to a nice little move to the upside. And after you get a move to the upside like that, it's only normal to expect some balancing. And that's what's going on right now.